Hey guys, Alan here. For kicks, I thought you might like to hear about some of the craziest tax loopholes. I mean, these are real tax loopholes that you can use to decrease your taxable income, run your business, and just have a laugh while you're doing it. Let's get started. The first and possibly the absolutely best crazy tax hole is the deadbeat deduction. Yes, you can deduct from your gross income the money you loan to a deadbeat who has made it clear that you're not getting your money back. Originally, this was just for businesses, but the way the law is written, everyone can use it. You can even use it if the money was loaned to a friend or a family member. There are a few caveats though. It must be clear that it was a loan and not a gift, so a written agreement will be great. It also must be clear that the person cannot and will not pay you back. For example, if the person has just filed bankruptcy, was sent you an email or letter saying that the money cannot be repaid, or the person is refusing to repay the money, that is a good indicator that you may be able to use the deduction. Now, to use this and be sure of getting deduction, or at least improving your chances of getting deduction, the loan agreement should be in writing in most cases. And you must show that there is no chance of you getting the money back. Awesome, right? Kinda. Maybe it's better if you just stop borrowing money to deadbeats. My second favorite, the life insurance loophole. If you have a whole life insurance policy that's cash value, you can borrow against the cash value in your policy. You can also take a loan out on your policy while you're still alive. The loan is income tax free, but you must pay the loan back with interest. If you don't repay the loan you took out from yourself, it will be paid back by your insurance company with the cash value of your policy. If the payment exceeds the cash value of your insurance policy, the policy will lapse. At that point, you will owe taxes on the amount of the loan that exceeds the premiums you paid into the insurance policy. If you die with a loan outstanding, the amount of the loan is subtracted from the proceeds paid to your beneficiary. This life insurance loophole allows you to become your very own bank. Moving on, pass-through business deductions. Taxpayers who have a pass-through business, like a sole proprietorship, partnership, or S corporation, can deduct 20% of the income from the business from their taxable income. A pass-through business is one where the business itself doesn't pay taxes, rather the business owner paid the business taxes on the owner's personal tax return. Income limitation applies to deduction, and there are different rules for different kinds of businesses. Single taxpayers earning less than $164,900 or a married couple filing jointly earning less than $329,800 can take this deduction. If you earn more than the max amount, you'll have to take into account the wages you pay your employees and your investment account. This crazy tax law is just so amazing. I don't know what to say. I call it the pet expenses deductible. There are ways for you to deduct the cost of feeding and caring for a pet if the pet is useful for your business. So how can I do that? Let me tell you. If you use animals in your business, you may be able to deduct the cost of caring for them from your gross income. You can deduct the cost of moving your pet, like your cat, dog, bird, or any other pet, from your old home to your new home, if one of the following applies. You lost your job and are relocating to start a new job. You're an active duty military service member who has moved due to reassignment. You're an employee who has been reimbursed for moving expenses dated before January 1st, 2019, and you did not claim those moving expenses on an earlier tax return. The next one, we're gonna call it the business guard dog deductible. If you use a dog to guard your property or business location, you can deduct your pet care costs as a business expense. What do we have now? The pest control deductible. If you use cats to keep your business free of mice, rats, snakes, or other pests, you can claim the cost of caring for them, even if it's only buying cat food for feral cats as a business expense. Note, house cats don't qualify usually because they don't do anything to help you maintain your business. The service animal expense deduction. You can deduct the cost of caring for your service animal as a medical expense. Farming animal deduction. If you breed animals, you can depreciate your breeding stock as they age. Fostering and sheltering animal deduction. If you volunteer to foster or shelter animals, it may qualify as a charitable donation. As a charitable contribution, you may be able to deduct the cost of food, veterinary service, and the mileage for traveling from place to place to care for the animals. The yacht deduction anyone can take. If you paid off your primary residence you can deduct your mortgage interest up to $750,000 per year for another home. The other home must have a sleeping area, cooking area, and a toilet facilities to qualify for this deduction. That means that you can deduct the interest paid on your mortgage for your mobile home, boat, trailer, as long as they meet the minimum requirement. Go ahead and creatively use that yacht deduction to deduct interest from your mortgage payment for other residents that you can live in and that are not your primary residence. Deduction for having a kidnapped child? If you're so unfortunate as to have your child kidnapped during your tax year, you can still claim your child on your tax return. Your kidnapped child can be claimed as a dependent and used to qualify you for all dependent-related tax deductions and tax credits. For example, if your child was kidnapped in January 2022, you can use your kidnapped child for tax deduction on your annual income and to qualify for the earned income credit. Although this one is morbid, it may still be useful for some people that got their child kidnapped and not sure if that child, since they didn't live with them and live at the kidnapper's house, can still qualify to be deducted. Yeah, I hope this never happens to you. Next, smoking cessation deduction. If you are a smoker and trying to quit smoking, you may be able to deduct the cost of all the different treatments you use to get rid of your smoking habits. The costs covered include smoking cessation program, nicotine patches, stop smoking aid, and other programs designed to help smokers stop smoking. Next, we have the fitness deduction. Have your doctor prescribed physical fitness with some form of exercise in order to improve your health and prevent your early death? If your doctor prescribes weight loss as a medical treatment, you can deduct the cost of it as well. For this to qualify as a tax deductible, the doctor must prescribe exercise as a medical treatment because your life is in danger due to your poor level of fitness and will continue to be so if you don't exercise and lose weight. The gambler's deductible. Do you win big at a casino or racetrack? Well, you can deduct your losses from your winnings accrued during that same trip before you calculate the tax you owe on your winnings. Awesome, right? You can't deduct your losses up to an amount equal to your winnings. The losses and winning must be itemized, and you must keep records of what you lost and won and where you lost and won that money. Next, we have the tax-free rental income. You can rent out your home for 15 days every year. Did you know that? And not pay taxes on your rental income. So for some people, this income won't be worth much, but for others, it could be worth a lot of money. If your home is in the vicinity of a popular annual event, let's say the Masters golf tournament, or a big college football game, state fairground, etc., your rental income for 15 days could be quite substantial. No matter how much you charge for the rental of your home during the 15-day period, you don't have to pay taxes on the rental income earned from it. Pretty awesome. Go out there, rent your home right now. Personal swimming pool deduction. You can write off the cost of installing a swimming pool and maintaining it. The tax deduction that you can take is minus the increased value of your home due to the installation of your swimming pool. Now, this can only happen if the swimming pool is installed for medical reasons. Hence, it's a medical expense. The Clarinet Lesson Deduction. Do you have itemized medical and dental expenses? Do you have an overbite? Does your child have an overbite? If anyone in your family has an overbite or other dental related problems, and does doctor prescribe clarinet lessons to help resolve the problem, you can write off the clarinet lessons as a medical expense. This is tax legend, guys. In 1962, a man successfully argued to the IRS that his child's clarinet lessons were tax deductible because the child's orthodontist prescribed clarinet lessons to treat your child's overbite. So if your family has overbite genes, no worries, it's a tax deduction. Next, we have the performing artist deduction. If you're a performing artist who have performed for at least 2 employers during the tax year and receive paid of $200 or more for each performance, you can deduct your allowable business expense that exceeds 10% of your gross income from the performances. In order to qualify for this, you must have an adjusted income of $16,000 or less before deducting your business expenses for performance expenses. There are other weird tax loopholes for private plans, body oils, breast augmentation, and equity interests. So before you assume that things that help you practice your business, operate your business, protect your business, help your business flourish are not deductible business expenses, check with a tax professional. You never know. And that's the beauty of it. You want a tax professional that really understands the type of business you're in because they understand the tax code from top to bottom. You may be surprised how generous the IRS is with tax-deductible business expenses and how many crazy business tax cases there are out there. Again, if you guys are the first time tuning in, my name is Chen. I'm a CPA, and we help online businesses such as startup, SaaS, content creators, and e-commerce companies get the most money for their tax return each and every year, because that's what we specialize in, and we know all about these crazy tax loopholes, and we make sure that Uncle Sam never reaches into your pocket to get one more dollar than they should. So for more information about tax deduction, tax credits, and tax strategies, subscribe to my channel, please. And hey, if you do have a question, please leave a comment below, and remember to hit that thumbs up button also in the meantime. We'd love to help you guys out there. Feel free to leave a comment and we'll resupply and maybe even make a video out of it in the future. Thanks so much. Alan out.